Okay, so that it can be recorded. So today we're gonna do the tutorial on the capital budgeting chapter, and you have been supposed to solve all the questions, like from 1 to how many questions we have here? 55, 56 questions. So actually, I will go very quickly over the questions, and you are already provided solutions, but it will be the best if you ask me the specific questions, like which questions you are stuck that you cannot understand. But there are some questions that I want to go over, which I did not solve in class, related to economic profit and economic income and market value added. This thing that I didn't solve in the class. So for others like NPV, equal annuity, and least common approaches, I solved them everything in the class. I'm not going to go over, but if you have any questions, please feel free to ask now before I move to questions I want you to pay attention as well. Is there anything you want to ask? Any specific question regarding this question that you are given to solve? Anything that you couldn't understand why the solution is provided and why it's given in that way? Please do not shame or do not hesitate. Ask directly. Write it in the chat which question is like raising the issue in your mind. Let me share screen with you. Okay. Question 1, 2, 3, and it goes like this. It's NPV and IRR. We are using the spreadsheet. In the exam, you're allowed to use the spreadsheet. There's no problem with that. You're allowed to do that. And you're allowed to do that. Concerning the timing, the exam will be at 1 o'clock for 2 groups. So all the 2 groups will write at the same time. 2 groups are going to write at the same time. So at 1 o'clock, if you have any class, then you have to skip that class. I'm sorry for that. This is the exam that you have to write it at 1 o'clock on Monday. So, okay, if you don't have any questions, then I want to start with this, like question number 31.
Yes, Professor, can you start from here on? Because these were a bit complicated questions.
This one, yeah? This
I
one.
mean, starting from here and on.
Here, from these questions. Okay.
Yes, because most of the material starting from these questions are new, from new.
Yeah, sure, definitely. I'm going to explain it. But 60-70% of the questions will be related to the NPV, IRR, equal annuity, and so on. But this economic income, economic profits, and market value added, and so on will be like 20% of the material. So I will explain it. So let's start with this question. Linda Peely is the head of analysis recruiting the PPA Securities. She had been frustrated at the number of the job applicant who, in spite of their stellar pedigrees, seem to have a little understanding of the basic financial concept. So Peely has written a set of conceptual questions and simple problems for the human resources department to use the screen for the better candidates. So in applicant pool, a few her corporate finance question and problems are given below. So concept 1, concept 2, concept 3, and 4. A company invests in a depreciable asset financed partly by issuing fixed rate bonds. Inflation is lower than expected. The value of the real tax saving from the depreciation and the value of the real after tax rate expense are both reduced. So there's some concepts are given. We're going to come back to this concepts, okay? Whether these concepts are true or not, we'll come to this back when the question asked. Problem here under the last concept, it says that Fontnet company is investing 100 euro in a project and is being depreciated straight line to zero over the 2 year of life with no salvage value. The project will generate the earnings before interest tax 50 each for 2 years. And weighted average cost of capital is 12% and the tax rate on this is 30%. So starting with the question 27, for concept 1, the statement is correct. Statement is correct regarding the effects on. Okay. For the concept 1, let's read the concept and try to understand better. Concept 1, a company invests in depreciable assets, financed partly by issuing fixed rate bonds. So which means they buy some assets which is subject to depreciation, and partly part of this asset is being paid by using the bond with a fixed rate bond. If inflation is lower than expected, the value of the real tax saving from the depreciation and the value of the real after tax interest expense are both reduced. So is this true or not? So the value of depreciation, the tax saving, actually is not being reduced. It will be increased. But the value of the real after tax interest expense will be also increased. So how you should get to this point, try to understand and try to put yourself into the shoes of the creditors. When there is a high inflation, what happens to the value of the money that you owe to the debt, to the creditor?
It become lesser.
Become lesser, it's going to reduce. But in here, it's just opposite. Inflation is lower. So which means what will happen to the value of depreciation and the interest expense? Will go up, will be increased. So due to the lower inflation, the value has increased. This is we understood. Essential discounting at lower rate. So for concept 1, statement is correct regarding the effects. So the tax rate saving from depreciation, but incorrect regarding the real after-tax interest expense. So you see, it says the reduced. So is it correct? The statement, the concept is not correct because as we said, the inflation, if the inflation is high, it reduces the value. If it's opposite, it increases the value. So neither real tax saving from depreciation or after tax interest expense will be reduced. For concept 2, the statement is correct regarding, okay, sensitivity analysis and scenario analysis are useful tools for estimating the impact on the project's NPV of changing the value of one capital budgeting input variable at time. So statement is correct in regarding sensitivity analysis, but not the correct in regarding scenario analysis. So first of all, you should be able to define what is the sensitivity analysis, what is the scenario analysis. So what is the difference between sensitivity and scenario? Give me the definition, please.
In sensitivity analysis, we change only one input and we see the effect on the NPV, whereas in scenario, we change a set of inputs depending on which circumstance we look for,
Yeah.
and see effect on NPV and IRR.
So this means that changing of one capital budgeting input variable at a time, it is only related to sensitivity analysis, not the scenario analysis. So let's go to the question. For concept 2 statement, the sensitivity analysis is correct, but not the regarding scenario analysis. Scenario analysis is correct, but not the correct regarding the sensitivity analysis, both sensitivity analysis and scenario analysis. C is automatically excluded. C is automatically excluded. And we said the sensitivity, our friend mentioned, defined that changing only one variable is all about sensitivity analysis. So we select A. So you should be very careful about the statements, okay, when you read it and so on. Are the statements defined as concept 3 and 4 correct? Let's go. When comparing two mutually exclusive projects with the unequal lives, be careful. This is the keywords. With the IRR is good to approach, and the IRR is the good approach for choosing the better project because it doesn't require the equal lives. Okay. And project-specific betas should be used instead of companies' betas. Okay, actually this we have not covered, and this I left it to the next chapter related to the beta. Okay, just tell me about this. When they compare to mutually exclusive projects, is IRR is good approach or not?
No.
Why?
The best project is the best is NPV.
Yeah, it's
rather
one
than
thing,
IRR.
but NPV still cannot be used to in unequal lives. What can be used? Which approaches?
NPV approach.
Be careful.
Replacement chain method and equivalent annual annuity.
Yeah, least common approach and equal annuity, annual annuity approach. So there are two approaches that we are using when there are two projects mutually exclusive and they have got different useful lives. Okay, after tax operating cash flows in euros and photo companies are, so after tax cash flow, so we are given here, the projects will generate, and remember how the cash flow is estimated, is cash, sorry, the sales cost, depreciation, then you generate the earnings before tax, and you subtract the tax, and you add the depreciation back. Okay, this is how you do it to get the operating cash flow after the tax. So the project has got the interest before interest and tax 50. So this EBIT is 50 for 2 years, and tax rate is 30%. So what is the operating cash flow after tax? So, and depreciation is, who can tell me?
The depreciation was 50.
Yes. Why? How did you come up with this?
Because it's straight line
Straight line depreciation is 100 divided by 2 years.
By years.
and 2 years. Yes.
By 2 years. We divide just by 2 years and directly we get 50. So 50 is taxed by 30% plus 50 back, which is 50 plus 25. Sorry, 35. 35, I'm sorry. I said 25. So that would give you in total 85. So 50 times 1 minus 30%. That is like 50 minus 15, which is we have 35 left after the tax, and plus 50 depreciation, which is 85. Okay. So we are here, we select C. Economic income in euros, company is equal, and market value added is equal to here. So what is the formulation of economic income? Okay, slides are here. Let me just remind you. Okay, here we have two formulas, but they're both same. Okay, economic income, cash flow minus plus change in market value, or a cash flow minus economic depreciation, which is beginning market value minus ending market value, or the same thing, ending market value but minus beginning market value, but then you should add it here. First of all, to find economic income, we need to find the, let's say, I'm going to use this one. Okay, let me use this with economic depreciation. Okay, so to find the market value beginning, then market value ending, then this will help me to find economic income. So let's see what is given, what's not given here. Okay, our cash flows every year is equal to how much? 85. This is how we found it in previous question. Okay, cash flow every year is equal to 85. So to find the value in year 0, and we need to find the value in year 1, so which is beginning, which is ending. So value 0 is the beginning, but the formula, we say that economic income is equal to cash flow, and our cash flow is equal to how much? 85. Okay, 85, we found it, minus change, I'm putting like this. Okay, the triangle, change in market value, which is beginning and ending. And to find the market value, let's say V0 will represent the market value. So we're going to use for 2 years. So which means 85 for the first year is discounted to the year 0 with a discount rate of 12% plus 85 or 1.12 to the power of 2. So in total, it should give you 143.65. Sorry for my 3. This is V0, and now we can find V1. V1, we need to use only one cash flow from V2 from the second year, which is 85 divided by 1.12. That would give us 75.89. Okay, now we found it. So the change is the difference, like beginning minus ending. And then we subtract but in here, look what it says. Economic income in euros for the company is, so we need to find for year 1 and for year 2. This is we're trying to find it for year 1. This is the difference you get for year 1. So economic income is equal to 85 minus the economic depreciation, minus the change value. So the difference between 143 and 75, which is 67.76, and it is equal to 17.24. This is economic income for the year 1. Now we need to find economic income for year 2, which is cash flow of year 2 minus the change income between V1 and V2. So V1, we found it already here. Okay, the market value change. So we discount, and there is no more cash flow, which means 0. So V2 is equal to 0. So the difference between 0 and 75, it's 75. So economic income of year 2, 85 minus 75, because V1 is 75 and the difference is 75. So we put this difference here. .8 something, 89, and the economic income is 9.11. So 17 and 9, 17.24 and 9.11. So this is
Yes,
part.
can I ask a question, please?
Yes, sure.
When we mean economic income in year 1 or year 2, do we mean end of year 1 or beginning of year 1? The same, or year 2, end of year 2, beginning of year 2?
Economic income in year 1, we mean from year 0 to the year 1. It means end of the year 1. Okay. From the initial, we move to the year 1 and we take the whole year of the year 1.
Okay.
Because the cash flow is generated in year 1 is 85. Okay. And in year 3, we don't have anything to calculate the value of V2. So that is 0.
Beginning market value we get from the cash flow.
Yeah, which is given, which is the difference. Okay.
Okay.
You get the how much value you have it in V0 for all cash flows, or in V1, whatever is left. If it's V2, so look, we have 0, 1, 2 years, 85. So 85 here, 85 here, and year 3, we have nothing in here. So if it's V1, so you're trying to discount this one to here. If it's V0, you're trying to discount this one to here and this one to here as well. But V1, only the 85. When you're trying to find the V2, actually this 0. There's nothing to discount.
I got it. And
so V2 is here, actually. So V2 is here, and we are trying to discount this 0 to the year 2. Okay. And market value added approach. So in here, it's an NPV of economic profit. So you're trying to discount the economic profit. So if you see the formula, it was somewhere here. Oops. Here, NPV or market value added, which is economic profit divided by 1 plus weighted average cost of capital. To find the economic profit, which is here, EP is net operating profit after tax minus dollar cost of capital. So what we do here, we just need to calculate the formulas. We need to calculate the economic profit for year 1 and economic profit for year 2 in order to be able to calculate NPV, the summation of the economic profit of the. So we're treating the economic profit as cash flows, okay? We're treating it as cash flows. It's a different way of estimating the cash flows. It's a different way of estimating the cash flows. But there is called as economic profit. So if you put it here, first, we said the economic profit. Let me do it in year one. We are using the formula like net operating profit after the tax is minus cost of capital, which is, let me just make it to show it to you. Here, 50, 100, 12, and 30. This number that you should remember when you calculate economic profit. So economic profit of year one is equal to, we need to just calculate, but I didn't show you something else. Here, how we calculate the net operating profit after tax, we calculate EBIT, we should tax it. We need to just tax it. So our EBIT is 50 and tax rate is 30%. So we need to just tax it in order to get net operating profit after tax. So 50 times economic profit of year one is equal to 50 times 1 minus 30% minus the discount rate, which is 0.12% times the cost of capital. That is equal to $100, which is invested at the beginning of the year. So 12% is it's just formulation where it says like weighted dollar sign times the weighted average cost of capital. It is the required rate of return times the cost of capital. This is how we get it. So economic profit is equal to 23, if you calculate it, of year one. And economic profit of year two is equal to 50 and 1 minus 30% minus 0.12, same, but with one difference, because 1 year passed, and what will be the cost remaining after the depreciation, which is 50. So 29. And market value added is equal, then we need to just discount and sum it up. Economic profit of year one plus economic profit of year two, what should be discounted? Like 23 divided by 1.12 plus 29 divided by 1.12 to the power of 2. And in total is equal to 43.65. Okay, that's it. We select part. Yes, please.
Yes. Wouldn't it be just easy to find an NPV, like from the table?
It's an MPV. It's an MPV.
Yeah, I know, but I mean like this, we should calculate this on exams like this, or we could use tables on exams.
You can use it. You mean the Excel spreadsheet? Yes.
Yeah. I mean,
Of
Excel
course, of
spreadsheet.
course. You are free to do anything. I'm just showing you the way of calculation. Okay, here, just
Okay, thanks.
opening the equation itself, how we find it. Of course, you are free to use the Excel spreadsheet. You are free to use the financial calculator, but the most important thing, you need to get the result. Okay. I will ask some multiple choice questions, and I will ask some solving problems. Okay, we'll have 2 solving problems. You'll have several multiple choice questions. But all solving problems will come whatever you have seen in the class. Nothing beyond the schedule. And you are expected to get all 100 without copying. And I want to warn you now, please be careful. like from the experience of the previous semesters, the students, they failed the exam 1. Why? Because they copied. They didn't realize that the questions are different. I asked the questions, they look like same, but the questions are really different. The conditions that are asked in the questions are different. So whoever who did not study, who did not prepare, he will not be able to realize that whether the questions are same or not. So he will just copy and paste. So that is really making me more upset. That's why I'm telling you, just study whatever I solve in the class. That's it. No, not more than this. And you will get really good grade for it.
Can you again show the formula? Yes, we multiply WACC to the total capital. Yes?
Yeah. Weighted average cost of capital is the required rate of return times total capital. Total capital is how much money is invested in fixed capital.
In the economic profit second, we multiply to the 50 because it's became lesser in the economic profit in the second year. Or how it was in the example?
Just a second. I'm sharing the example. This example, yeah? So we did, it is 50 cash flow, EBIT, is taxed. In order to get the net operating cash flow after tax, we need to tax it like times 1 minus 30%.
This one is end of year, right, Professor? This end of year 1.
Yeah, sure.
In terms of capital, we look at beginning of year 1, right? 100
Yeah, beginning of the year 1. No, in terms of the capital, we are taking initial investment, like year zero.
Because in year 2, we calculate as 50, which was...
Yeah, because it is depreciated and it's subtracted.
So it's beginning of year 2, right? For year 2.
Yeah. In the beginning of year 2, which is left 50. And then we just, whatever we find it, like 23 and 29, we just discount it and added them up and we get the market value added. So it's kind of alternative way of finding the NPV. Okay, this is question. Do you have any questions? Okay, I think it's pretty straightforward. We've got in here another question. And like it's a bit long question, but you're asked to calculate, like 3 questions are given in one question. 1, 2, and 3. Like there, and 4 even questions. 4 questions. And this 4 questions, I'm not going to go over theoretical one, guys, because you have to do it on yourself, please. And if you have any questions, please feel free to ask, or when I finish today, you can get in touch with me later, like through the WhatsApp or email, no problem. And this optimal subset of the 6 projects, it's very easy and straightforward. You're gonna just try to select which is optimal one. You are given the capital budget of 40 million and you're given different like 6 projects. So which one is more optimal one, okay? Optimal set, so you have to select. It's easy, I mean, we did it several times. If you don't remember, you can rewatch the video here. Everything is named. You can rewatch anything, okay? So what is the NPV of the original project of society without considering expansion? So we're given here information. This is one project. This is another project. This is expansion, like if you expand it. So they tell you, please calculate the NPV if it's not expansion. Then calculate the NPV with expansion. I mean, I'm not going to calculate. You know how to calculate it. It's straightforward. And same the question, should the capital budgeting economic committee accept it? You have to read the suggestions. Like suggestion 1, in order to put all the capital budgeting proposal on equal footing, the project should all use the risk-free rate for the required rate of return. So can you to make the put all the capital budgeting proposals on equal footing, is it reasonable to put the risk-free rate for required rate of return?
No.
No, of course, no. Then what is the meaning of using the required return? Because we are using it because of the risk that we take it. It's the compensation that the investors actually pay. So it's not the case, actually. So you have to read the questions very carefully and answer. 38 as well. And there is another question, the following 39 and 44. It's kind of a bit long question as well. It's matter of reading as well. It consists like several questions in one question. Like some multiple questions are related to the initial part, to the middle part, and the last part.
Excuse me, may I ask?
Yes, sure.
I've got some problems with question 39.
Oh, I'm coming to that one. Yes, sure. We'll go this question.
Yeah, I couldn't just calculate it. I just tried a trial and error method because I've tried to apply every variant. So I should write an every table for an A and B and C and just find an error for every table.
Okay. Now, let's get this question is related to the question, this one, this part, okay? So this is related to here. So Maximilian Baum is reviewing the several capital budgeting proposal from the subsidiaries of his company, although he's reviewed the deal with the several details of the May, like a minutiae and company places the premium, blah, 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 something. So the first proposal of the project, which is investing 500,000 in all fixed assets, and we'll have the depreciation operating income, respectively 40 to 20,000 each year for the next 3 years. So 3 years, depreciation will be 40 and 20,000 will be the operating cash flow. Reach will sell its asset in 3 years and pay in 30 tax, so 30%. Blah, 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 and so on. The proposal indicates that 647,500 terminal selling price will enable the company to earn 50% internal rate of return on the investment. So doubts that this terminal value estimate is correct. Okay, let's see the question. What is the terminal selling price is required for 15% internal rate of return on RICHI project? What is the real price? Not the price which is mentioned in here. Okay, what should be the terminal real price? How much it should be selling? So first of all, we need to identify. So we said we have 20,000 of depreciation and 40,000 of operating cash flow after tax. So this will give us cash flow, operating cash flow after the tax, which is 60,000. Okay, you remember the Excel spreadsheet?
Yes.
60, 60, 60, 60, and the last year there is a terminal non-operating cash flow. Okay. How we found terminal non-operating cash flow is the salvage value or selling price minus 30% times selling price and minus the depreciation amount. Not the depreciation amount, I mean the depreciation amount should be deducted. I mean, because it passed, it reduced. So minus the book value, okay? Minus the book value. Let me call it book value. This is the formulation, okay? Selling price of your capital, 30% tax will be But selling price, how much for how much you're selling, and the book value, how much is the value now. So the difference, if it's negative, then you're gonna get the subsidy. If it's positive, if this is higher than this, then you have to pay the tax, and this should be subtracted. And this is how much money will be left in your terminal non-operating cash flow in the last year. This is the formulation. So selling minus 0.30 or 3, selling book value 3 years past. The depreciation is actually not 20,000 but 40,000, which is 120, and the cost fixed capital is equal to 500,000. So 3 years passed, which means 120,000 is already accumulated and deducted from it. So which is 380,000. So this is the formulation of the terminal. You remember the terminal non-operating cash flow? I don't have to.
Yes.
I don't have to share you. Okay, you got this formula. Okay, the reason why we put it this. It's like terminal non-operating cash flow.
And we just added in the last third year, yes? When
Yeah,
we
in the last year. Yeah, in the third year, we're adding to the cash flow. We're adding to the cash flow in the last third year. Like it will, this amount will be added to this 60,000. Okay. So this, what I mean here, like if you calculate the NPV, is what you will do 60, let me move 1.15 plus 60, 1.15 to the power 2 plus 60. And in here, 60 plus terminal non-operating cash flow divided by 1.15 to the power 3. This is what we do basically when we calculate NPV. Yes? Everyone remembers this?
Yes.
Okay.
Yes.
Now we need to find this one. Okay, we need to find this one. I mean the selling price. The selling price. So we put this formula. I will assume in order to find something, we need to make it 0, okay? Our NPV is equal, like it's 0, which is 500,000 for equation, okay? 500,000. So this part and this part is 0. Exactly the same, and they equalize 0. So what I will do next, I'll get my formula, this one, and put it instead of this. Let me make it bigger. Or more precisely, I want to put it in this way to get the known on one side. I will make this 1.15 to the power 3. Can I do it in this way?
Yes.
Okay. So what is left? I need to find this selling price for how much I will be able to sell it so that I can include it in terminal non-operating cash flow. So when I calculate this part, and bring it to the left side and subtract it from 500, I will get 363.5, 363,000.5 equal to this. Then is just get rid of this sign. This 1.15 to the power 3 to get rid of it. I'll have like selling this on one side. How do I get rid of? Just by multiplying both sides, right and left. That will give me 438,087.5. And nothing is left. You just get this selling out of the bracket and multiply with a 0.30 and this one, and bring all the known things to the right side and unknown to the left side. And that will help you to find selling price, which will be equal to 625,839. Now you can compare this answer with the which is offered in the question.
Excuse me, may I ask?
Yeah, please, sure.
Once again, I just didn't know how to view. I just didn't know how to make this in a spreadsheet because it's like a mathematical equation.
This is, you cannot do it in this. Actually, spreadsheet you can use to calculate this part, okay? But it's mostly playing with the formulas.
Yes.
Like with the equation. This is, I'm telling you, if I ask this question, I will ask maybe pay attention 80% whatever you were doing in the spreadsheet. But this question, I may ask you, but with the different numbers and so on. So you have to calculate by manually, not even the manually, but using the spreadsheet as well. You can calculate easily.
Excuse me, may I share my screen just to ask?
Sure. Let me save it this, okay. Okay, you can share it.
Yes, I just want to ask.
Oh, your screen is not visible well. Can you make it bigger? Your spreadsheet?
How I should make it bigger?
Just press Ctrl and scroll forward the mouse. You're using mouse?
Yes, I'm using mouse.
Okay.
So just to do this, I just used a trial and error method because I can in a Excel to show it. So
did you get the same answer?
I've got the same answer because I've just calculated RR for every answer because I've put in a sales the answers like in a sales like here.
I see.
So that's
you were trying an error. How long it took it to get it that?
Yeah, it was too long.
Yeah, that's what I'm telling. That's what I'm telling. Sometimes, yes, you might use it, but in here still you're doing the manual thing. But in here, what is required to use some mathematical equation logic, okay, some arithmetics in order to get the results.
We could use, yes. It's like,
yeah, you can use it, but it will take longer time. But I don't know whether it's going. I think it's not going to be efficient in the exam because the timing is very important in the exam. You have to take the things more clearly. So did you understand the way that I showed you now?
Yes, I understand.
Okay, use the same way that I did it for this type of question. But for other question, you can use, still in here, you can use the MPV. I mean, a spreadsheet, like calculating the MPV rather than just calculating manually. So it will even make it more quicker.
Okay, but in the future, in other tasks, because sometimes I just found like I couldn't use spreadsheets like to make it normal in a spreadsheet.
I
can
see.
just write like in an Excel like in this way. I mean, like you did it
Yeah, yeah,
last time.
yeah, yeah, yeah. You can do it like this in this way.
Okay, thank you so much.
You're welcome. Okay, I'm skipping this theoretical part. NPV, IRR, you can calculate. And this one I'm skipping. Okay, we're coming to the last part of the questions. In here, should estimate the after-tax operating cash flow. So you need to calculate what is the operating cash flow. I'm not going to calculate. This one I'm not going to calculate. And simple estimate NPV project correct. Okay. I'm not going to solve, but one question I want you to pay to the attention is question number 51, which
I
is
had a problem with it.
51.
Yes.
Okay. As I guess. So this is biggest things are given. Okay. I'm going to solve these questions. So these questions are pretty easy. You have to pay just bit attention and try to understand what you need to solve it here. But all the instrument that you have that you're equipped with is enough to solve these questions. Now, question number 51, economic income, economic profit, residual income, wealth of equity. So what we need to do just using this table to calculate this estimation. So we start with the question 51, economic income. So it's the same thing that we did it previously, like cash flow minus economic depreciation. So how we find the cash flow after operating cash flow is EBIT 1 minus tax. You derive EBT, earnings before tax, then you add the depreciation back and adding the after tax salvage value. That will give you. So basically, we are given 5 years. Okay, we are given 5 years. Let's use the spreadsheet. Okay, let's use the spreadsheet. We're given 5 years. Okay, 0, 1, 2, 3, and so on. So we need to calculate operating cash flow. So, which is the last stage that we use it. Okay, operating cash flow after tax. Okay. Okay, to get it, we have all the things, like we will start with the EBIT, earnings before interest and tax. We'll start with this. Then tax. I'm ignoring the interest, okay? I'm ignoring the interest. In here, for reality, you should take into consideration the interest expense as well, but we are ignoring for simplicity, okay? We're just gonna get these numbers, like 30, 40, 50, 60, and 40 for 5 years. Like 30,000, 40,000, 50,000, 60,000, and 40,000. And the tax, oops, sorry, is 40%. We get operating cash flow after tax. And of course, we need to put back the depreciation amount. So operating cash after tax, 30 minus this. And the depreciation for all years is the same. 40, 40, 40. So So operating cash flows are here. And at the end, what we do, we are adding back the salvage value. We're adding back the salvage value, okay? But that salvage value should be taxed, of course. Do we have any after tax? Okay, after tax salvage value. Okay, 12,000. Something that you're selling, the sold amount should be taxed, subtracted from the selling amount, and you get the salvage after tax salvage value, which is simply to say we are talking about the terminal non-operating cash flow, the terminal cash flow. So salvage after tax, 12,000. $76. Okay. Now we need to compute economic income. We need to compute the economic income, and economic income, everybody knows, is equal to cash flow. Okay. Economic income is equal to cash flow. I'm talking about economic income of year one, cash flow of year one, minus economic depreciation, which is the difference between V0 minus V1. This is, we know the formula, okay? We already applied. Now, the next step, we need to calculate the first V0 and the V1. I mean, here, we should bring everything, all the cash flows, to the year zero. Basically, we need to calculate the NPV, okay? We need to calculate the NPV. So V0 and V1. So NPV. And what is the rate? Rate, I think, is rate is 12%. Which rate to use? This one or this one? 90% or this one?
12% because it's a cost of capital.
Yes, it's something else. We're not measuring the cost of equity. It's something else. So 0.12, we get all the values. Okay. This is V0. And now we can calculate the V1, which means that we need to bring everything to here. We need to bring everything to here, to year one. So but I'm excluding this. Okay. Now I found V0 and V1. Economic depreciation. So I have cash flow 1. So my economic income is equal to cash flow of year 1, 58, minus this minus this, V0 minus V1. That would give me economic income of year 1, which is any question?
Could you please show again how you find V1?
V1 for, so V0, it's an NPV. You're discounting all the cash flows to the year 0. Okay. You're taking discount of this all cash flows. You're bringing them to the year 0. But this is V0. Okay. But for the V1, we discount these cash flows only. That starts from end of the year 1. which is beginning of year 2 and so on, and bring them to here, to year Z1. So this is V1. By discounting means 64 divided by 1.12, 70,000 divided by 1.12 to the power 2, 76,000 divided by 1.12 to the power 3, and 4 and so on. If you just get the MPV of this and MPV of this, that would give you V0 and V1 respectively.
I understood.
Okay. What else I have? Okay. This is 51. So 51, answer is B. Because it may ask you what is your economic income in year 2, economic income in year 3. So be careful, guys, in the multiple choices.
V0, it's ending market value. That's why we like choose. We also include the outlay. Yes.
Yeah. Yeah. Which outlay we include? We don't include in here any outlays. We don't have any outlays here.
Yeah. I mean, first year.
Yeah. Yeah. Okay. Economic profit in year 1. Economic profit in year 1. So what is the economic profit is the formula that you're using. So we'll use the same table. Okay. Okay, we tax it. And we get this, we call it as NOPAT, net operating profits after tax. Okay, let's call it this as NOPAT. This is what we call it.
Excuse me.
Yes, please.
Can I call NOPAT as ABET?
Yes,
Because
yes, you can call it. It's as you wish, but the formula, it tells you that we have to use the economic profit as NOPAT minus $ times the weighted average cost of capital. Anyway, so that if you don't get loss, that's not a big issue actually. One thing I want to check.
I think we'll have yes, NOPAT in the case. It's given.
NOPAT, not is not given. Just trying to calculate. Okay, 50, 40, 60. Okay, that's great. And then we're moving to capital of the beginning year. We need to put it. So capital of the beginning year. Let's see it. But depreciation. Let's be the depreciation here. So capital beginning. Where is my capital here? Here we go. 20, 200,000, 160, 120, 80, and 40. $200, okay. And $20,000.
So Professor, these values are basically book values, right, of the asset,
Yeah,
adjusted by depreciation.
very true, very true, very true. These are the
Professor,
book well. Yes,
in
please.
year two, there's 16,000 or 160,000.
Thank you so much. Let me make it dollar sign so that I can easily figure out the zeros. Okay. Okay, capital big book beginning. Capital beginning is this one. 30, 40, 50, 60. Okay. And I have it here. Then it's not the salvage value, but I have, let's say, dollar sign times WACC, which is weighted average cost of capital. So 0.12 times this. Okay. And my economic profit. My economic profit is equal to NOPAT minus weighted average cost of capital. My NOPAT is this one, and minus this one. Minus 6,000. And plus this one. Why we are adding this one? Because it's a salvage value, after tax salvage value. Oops, sorry. Let's make it like this. Okay, this is economic profit. Now we can calculate market value added. So let it be this, okay? Before calculating the market value added, let it be this. Now we can move to the question itself. What is asked from us? Why I did this one, even though it asked only for the first year, but to make the things easier for you. Once you construct this table, it doesn't matter. I can ask, what is your economic profit of year 4? Who can tell me now?
30.
26.
26,400. What is your economic profit of year 3?
15.
15.
And so on. So once you construct this table, it will be easier to be guided directly. Because if you do this one, this should be done automatically, this part. So we are coming to the question itself. What is the economic profit in year 1?
Minus 6,000.
Minus 600.
Minus 6,000. So if I ask somebody else in the exam, what is economic of year 3? You should select the right one by going according to this table. Okay. Now we are coming to question 53, the residual income. And if you remember the formula of the residual income, here. Net income minus required rate of return on equity times equity charge for the period. It's a big book value of the beginning year. Okay, the book value of the beginning year. So now we're asked to find the residual income. And let's see from the table. Do we have the net income? Yes, we have it. Net income is here. Okay, we're given the net income is here, is given. So for all years, net income is here, 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 and so on. So what is the net income? What is the residual income then? What you need to do, just basic things. 11,899 minus required rate of return, which is 19%. Let me type it. $11,899 minus 0.12 times the book value. Wait a second. Come on. Where is the question? So net worth is here. Okay. So this is the things
What
that
is
we should
net
pay.
worth, Professor?
The net worth is equity value, the book value of the equity. The book value of the equity. Net worth is equity, okay? Because in the formula it says beginning period of book value of equity. And net worth is synonym of equity itself. Like sometimes it's used as a net worth, sometimes it has been used as equity.
How do we need to calculate it? We need,
This one, equity.
yeah,
It's 200 minus this 122, like asset minus liability.
okay.
Come on. So we are going to use this number and this number. And of course, and at the beginning of the year, like for the, if you're computing for this year, it should be -1, like going back. If you're calculating this year, you should go -1 this back, okay? You got it?
Yes.
Look, in the question it says, of year 1, you're computing of year 1. But formula says T minus 1, like previous year. The book value of equity of the previous year. Net income, current year. And required rate of return on equity is whatever is given. So 11,899 minus 0.12 plus, sorry, times book value of the equity, which is 77,973 of the previous year, which is 2,542. Correct?
Yes.
Sure?
Rate, is it 19 or it's 12?
Yes, very true. Thank you so much. Why not this one? Because it is weighted average of cost of capital. We need to get cost of equity, required rate of equity. I'm using the cost of capital. So the residual income is negative in here. So we need to select A. What is the value of the equity at time 0? You need to take the just present value of equity. So total value of equity, which is this one, dividends and the share purchases. We get these values in order to find the present value of it, the share purchases and the dividends, 37,542. should be discounted to the year zero, with the discount rate of equity, not the cost of capital. Like 37,542 divided by 1.19 and so on. It's easy.
We can use NPV formula.
Yeah, it's just NPV formula, but using the discount rate. That's very true. That's very true. And very tricky one. Question not 55, it's theoretical one, but the question 56. Okay. Which of the following would be Yip's the most appropriate response to the Robinson third observation? Okay. The market value added is the present value of the company's economic profit, which equals to the net worth. Okay. What do you say about this observation? In order to do that, you need to calculate the market value added. So to do that, you need to calculate the economic profit for all years. So we did already, if you remember, economic profit for all years. And we need to get just NPV of it. NPV 0.12. Get the range and calculate. So our market value or NPV of economic profit, market value added, or NPV. $44,054. So in here, let's compare it with the answer. The market value of added is not equal to the present value of economic profit, although the market value of equity is equal to 122. Market value of added is equal to the present value of economic profit, which is the case is 44,055. And market value added is not equal to the present value of economic profit. Market value added is equal to 44.55. So what did we find? Yes, we found that the market value of added is equal to 44,000 0.54. 0.54. So part B, they're equal. So the NPV is equal to the present value of the economic profit. Okay. Do you have any questions?
No.
Will you
Professor
upload
Halma?
the file?
Sorry?
Will you upload the file?
Yeah, I'm gonna do it now. I'm going to upload this video recording now. And where am I going to upload it? I'm going to put it here.
Thank you.
Okay.
Thank you.
In here. In Chemo 5. Okay.
Excuse me,
Professor, how much we will have in exam?
Sorry?
How much time
Timing?
yeah.
Don't worry, you'll have more than enough time. You'll have more than enough time. But I have not decided. I will first of all give you multiple choice with some questions to solve to illustrate your answers. And I will give you more than enough time. And one more time, please be careful. I know it's not all about you, but just in case, concentrate on your own questions. It will be open book. You can use everything, but be careful. Don't
Because
ask the help from. And what is the important thing? You need to share the video.
Oh, we have to switch on the camera.
Yeah, you have to switch on the camera. So I have to be sure that you're not alone.
Because
Okay.
I was concerned if we have such questions, it takes a lot of time. These last problems.
Yes, last problem, of course, I will take into consideration and I will give it to you. Or I might not give you the multiple choices, even though you have to calculate again. But I will give. If I give you the multiple choices, I'm shortening the time. But if I give you the calculation only, like calculating and showing your results and so on, then I will think of it. I think I'm gonna give you all the calculation where you have a lot of time to do it. But in both cases, you have to solve it.
Professor, does it mean we need to upload our Excel file with solutions, or
Yes,
there is
yes,
problem with
yes. You
multiple-
have to upload your solutions.
Okay.
In any way, you have to upload your solutions. For the questions, if I ask multiple choice and the open-end questions, for the open-end questions, you have to upload your solutions.
So open-ended, you will send as Excel file, right, to us?
Yes.
Okay.
And all the questions should be solved in Excel file?
You can solve it manually by
Just
showing
open
the
quick.
formulas and take the picture, upload it. You can solve
Just
it in
put in
Excel.
Excel file that we.
You can solve it in
And how many questions will we have in our midterm?
everything, whatever you covered. I will get all the
Yeah.
subjects involved.
And can we switch between questions?
This is a very good question. Most probably no. What I like it to make the question sequential, but concerning the timing, don't worry, you have more than enough time. So
Okay, and we will have chapter 2, 3, and what other chapters covered?
which
Chapter 2.
we covered only chapter 1,
Okay,
capital budgeting.
but okay.
Excuse me, Professor. In sequential order, we will have an open book questions too.
Yes, yes, yes.
Which we should send solutions.
Yes, for example, I will ask you 3 questions. When you solve one question, you have to submit the answer.
So
you don't send it to my email, you upload it.
The file, okay.
You upload the file.
So you will be sending one question at a time, right?
Yes, let's say, let me just, you can see my screen.
I'm sorry, Professor. Can we, for example, do like in the Moodle we have multiple choice, yes? And for example, not include cases in the multiple choice. So then in another file, maybe you will open maybe Microsoft Office Word, the file with the problems that we would have to solve, and we will do it in Excel. So I think it will be more comfortable.
I think it's best way to do it. I will give you in the Moodle question, because why I'm doing it, I want to be honest with you, because there are people who are studying hard and there are people who are not studying at all. So those who don't study, they will just copy and paste, and it will be easier for them to do it. When you have different questions and the questions are not ordered, I mean, if you know how to do it, there shouldn't be any problem in uploading. Do you have any problems in uploading?
I think no.
No, then why you should be afraid? If you study well, then you have how many days? Thursday, Friday, Saturday, 4 days. Believe me, these 4 days is more than enough to get the subject really with the highest grade actually here. So you have really more than enough time to study, and you'll be given certain questions, solve it and submit. Solve it, and it's an open book. You can open the questions. If you really study hard and well, you will be knowing where the questions are located actually, so that you can see the formulas and so on.
Okay.
You just get it and upload it, get it and upload it, get it and upload, but do not copy, please. It's not related to you, I know, but I'm just warning you just in case. In my course, it is easy to get A, and it is easy to fail as well. So you should be able to differentiate this edge between failing and success. Thank you so much. I wish you best of luck. If you have any questions during your studying, please feel free to contact me and ask me. I'm very convenient and I'll be pleased to help you. I'll be maximum. I'll do my best to be available in appropriate time to you as well during your preparation.
Excuse me, Professor.
Yes.
We will have midterm on Monday or on Wednesday.
Monday. Or you
On
want to
Monday.
make it Wednesday? I want to make it Monday and to give you the grades on Wednesday.
Okay.
Professor, about you said all people have to take the exam in the same time.
Yeah.
What we need to do with our classes? Should we inform?
Yes, please
Instructor.
inform your classes saying that instructor put the exam on this period that we have to attend the exam at 1 o'clock. Okay, if you don't have any questions, thank you so much. It was really good for me to see you all that you came. But it's not crowded, but anyway, but it's good. So I'm gonna put it now in Moodle. Whatever I did it. Let me just stop recording it so that